Welcome to this walkthrough of the ACCA F6 UK Taxation paper brought to you by ASWATAX. My name is Omar Aswat. We are looking at the June 2015 paper. We've adapted it for the 2021 tax year and onwards. And as usual, we shall take the standard approach, which is read the question, analyze it thoroughly, everything is in the question, and then we shall work through the answers. This is a 15-mark question. And before we begin, if you'd like to, check the description where you can download the question paper adapted. It's best to have the question in front of you. As I say, this is a 15-mark question divided into 3 parts worth 9, 4 and 2 marks. Before we begin, don't forget to like this video if you find it beneficial, comment with your thoughts and understandings, share with those who may also benefit, and subscribe to our channel. Also, visit our website where we have loads more videos like this available to you on demand. Okay, so the key is in the question, is in understanding and reading the question twice, 3 times if you have to, and making notes, annotating. So that's what we shall do. So Retro Limited summarized statement of profit or loss for the year ended 31st March 2021 is as follows. So dates are very important. As you know, with taxation, we are looking at the year ended 31st March 2021, and we are looking at a limited company. So rules for corporation tax purposes. Gross profit 127,100, operating expenses depreciation 27,240, gifts and donations 2,300, impairment loss 1,600, leasing costs 4,400, other expenses 205,160, and we have notes for the summarized P&L. Finance costs, interest payable, again we have some notes for that, 6,400, and we have a loss before taxation of 1,200. So loss before taxation of 120,000. Sorry. So that's our statement of P&L. We're happy with that, and now all the information is provided as per the notes. So looking at note 1, we have gifts and donations are as follows. So gifts to employees, food hampers costing £60 each. What are your thoughts on that? Gifts to employees, food hampers costing £60 each. Well, gifts to employees are an allowable expense. Okay, employees are there for trading purposes. Food hampers costing £60 each, no problem. Gifts to customers, calendars costing £8 each and displaying Retro Limited's name, £480. So generally gifts to customers are allowable. This you could argue advertising, so again wholly and exclusively for trade purposes because the calendars display Retro Limited's name. £8 each, gifts to customers. So generally speaking, gifts to customers are an allowable deduction if they cost less than £50 per recipient per year. So this is less than £50. They are not food, drink, tobacco or vouchers for exchangeable goods. So we have calendars here, that's fine. And advertisement for the company making the gift, displaying Retro Limited's name. We are happy with that, and we are happy with that. Allowable deductions, gifts to employees, gifts to customers, just because calendar, £8 each, Retro Limited's name. Political donations, qualifying charitable donations, are they wholly, exclusively and necessarily for trade? Well, not really. So political donations is an add back. Qualifying charitable donations is an add back when working out taxable total adjusted trading profits or losses. But for companies, qualifying charitable donations, if there are enough profits available, taxable total profits available, then you can get a deduction for qualifying charitable donations in the year paid. Moving on to note 2, impairment loss. On 31st March 2021, so in the accounting period, Retro Limited wrote off an impairment loss of 1,600 relating to a trade debt. That is very important. Trade debt, impairment loss 1,600. This was in respect of an invoice which had been due for payment on 10 November 2020. That's fine. Why? Because we have a trade debt, allowable expense. Note 3, leasing costs. The leasing costs of 4,400 as per the question, as per the pro forma, as per the P&L, are in respect of a motor car lease which commenced on 1st April 2020. As you can see, any date, definitely underlying it, keeping an eye on the dates. The leased motor car has CO2 emissions of 145 grams per kilometer. 145 grams per kilometer exceeds 110 grams per kilometer. Therefore, add back 15%. Okay, that's the rule. High emission cars, any leasing costs, only 85% is allowable. You have to add back, disallow 15%. Other expenses, the figure of 205,160 for other expenses include a fine of 5,100 for a breach of health and safety regulations, legal fees of 4,860 in connection with the defense of Retro Limited's internet domain name. The remaining expenses are all fully allowable. So we need to consider the fine of 5,100. Fine is always disallowable, and legal fees in connection with the defense of Retro Limited's internet domain name, I would class that as a trading expense. Therefore, 4,860 is fully allowable. Interest payable. The interest payable is in respect of the company's 5% loan notes, which were repaid on 31st July 2020. Interest of 9,600 was paid on 31st July 2020, and an accrual of 3,200 had been provided for at 1 April 2020. So we have year end 31st March 2021. An accrual had been provided for at the start of the year, and interest was paid 31st July 2020 during the year. The loan notes were issued in order to finance the company's trading activities, therefore allowable. So the key to these notes, when looking through the notes, the key is you have to have a few things in the back of your head. One is anything that is not wholly and exclusively for trading purposes, it would be an add back. And then there are other general rules such as fines are disallowable, leasing costs. If it's a high emission car, then then you can only get a deduction for 85%. So you add back the 15%. And there are other sort of anomalies. For example, depreciation, amortization relates to capital expenditure and disallowed specifically by statute. So we have some additional information provided to us. Plant and machinery on 1st of April 2020, the tax return down value of plant main pool was 39,300. So main pool 39,300. The following vehicles were purchased during the year ended 31st March 2021. So we have a motor car. Date for capital allowance purposes, ignore dates. So there's no proratering of dates in terms of when the purchase or the asset was brought into the business. There would be an apportionment for the accounting period being more or less than 12 months. That's when you sort of prorata the writing down allowance, etc. But in terms of date of purchase, if we're looking at a year end, so 12-month period, there's no apportionment. So even, for example, if you have year ended, which we have in this case 31st March 2021, and a motor vehicle was bought on 30th of March 2021, a day before, you'd still get the full writing down allowance of 18 or 6%. So as I say again, date of purchase of the asset is irrelevant. The only time you prorate for capital allowance purposes is if there is a change in the length of accounting period more or less than 12 months, because the writing down allowances, for example, are for a 12-month period. We have the motor car, 124 grams per kilometer, exceeds 110 grams per kilometer. Therefore, special rate pool. Delivery van, 28,300, 162 grams per kilometer, irrelevant. Van will qualify for annual investment allowance. And the second motor car is 86 grams per kilometer, less than 110, more than 50, therefore main pool addition. Further additional information, we have previous results. Retro Limited commenced trading on 1st of September 2018. Company's results for its two previous periods of trading are as follows. So we have year ended, so commence trade 1st September 2018, year ended 31st August 2019. And then we have a period ended 31st March 2020. Tax adjusted trading profits 56,600, 47,900. Bank interest receivable, we have 1,300 in the year ended 31st August 2019. Qualifying charitable donations paid, we have 540, 330, and we've seen some further up, which was the 680 qualifying charitable donations. Keep in mind, as I say, that you only get a deduction for corporation tax purposes for qualifying charitable donations if there are taxable total profits available. Future results. Retro Limited is expected to return to profitability in the year ended 31st March 2022 and to continue to be profitable in subsequent years. So that tells me carry forward won't be that much of a bad idea for the loss that we are looking at. What are we required to do? Calculate Retro Limited's tax adjusted trading loss for the year ended 31st March 2021. Note your computation should commence with the loss before taxation figure of 120,000, so they're helping you out. And should also list all of the items referred to in notes 1 to 5. So all the notes indicating by the use of 0 any items which do not require adjustment. So anything that you see in the notes will have to have either 0 next to it or a number next to it, but it has to be shown and has to be referred to, and that is for 9 marks. Part B, assuming that Retro Limited claims relief for its trading loss as early as possible. So that's what's usually done. That is the most beneficial, usually, unless there's a valid reason to do so. Calculate the company's taxable total profits for the year ended 31st August 2019 for the 7-month period ended 31st March 2020. That's for 4 marks. Part C, identify the amount of unrelieved trading loss which Retro Limited will have at 31st March 2021 and state how this can be relieved. I'm already thinking carry forward under section 39 CTA, and that is for 15 marks. Okay, so hopefully you have the question in front of you. As I say, check the description below and you can download it from there and you can have the question in front of you. But now we shall be working through the answer for question 5 Retro Limited, the June 2015 paper adapted for 2021. And we said part A is worth 9 marks. So we were given and we were told that the loss before taxation is 120,000. So I put that in brackets. And we simply add back the depreciation. Why? Because depreciation is disallowed by statute, relates to capital items. Rather, you get relief for these capital items, these assets, under capital allowances. Think about it. Why? Because depreciation is very subjective. You have reducing balance, straight line. So let's say, for example, you and I, we both have separate companies and we both bought the same equipment, or let's say machinery, for £100,000. I, as management of my company, say we are going to depreciate this asset over 2 years, 50% each year, and you say 20% reducing balance. Therefore, the deduction for me, for my company, would be £50,000 over 2 years, and for your company, it would be 20,000 for the first year, and then reducing balance 16,000, etc., etc. Massive disconnect. My entity would have a deduction of 50,000, whereas your company would have a deduction of 20,000. I would end up paying less profits over 2 years. Your company would end up paying less profits for a number of years, but at lower amounts. Therefore, subjective, can be manipulated. Tax authorities do not like it. Therefore, all businesses come to the same playing field, 18% and 6% for items in the special rate pool. You add back any depreciation, same with amortization. Depreciation, we add back 27,240. So we can make a note here, very briefly. We can just say, depreciation is disallowed by statute and relates to capital expenditure, relief given via capital allowances. Gifts to employees will be fully allowable. Why? Because, we'll make a note here, because gifts to employees allowable as potentially assessed via benefits in kind. So for the company, a gift to an employee is still an expense, an allowable expense for the company, as it's for trading purposes, and any tax that is potentially due would be treated via P11Ds payable via income tax, the individual or Class 1A NICs by the company. Gifts to customers, 480, we said calendars costing £8 each and displaying Retro Limited's name was £480, but we are saying it's an allowable expense. Why? We already spoke about it, but allowable if less than £50 in value, not food, drink, tobacco, etc. And we shall say used for advertising. That is the case here. Calendars costing £8 each, displaying Retro Limited's name. Therefore, we will say it's an allowable expense. Gifts to customers is allowable, generally disallowable if it's food. So by default, keep in mind, food, drink, tobacco, or vouchers would be disallowable. If they cost more than £50, disallowable. And if they don't carry some sort of advertising, then it would be questionable. This has advertising, therefore you could argue trading purposes, therefore allowable expense. Now keep in mind, these notes that we're making, they are not required in order for you to get the marks. The marks will come just from these figures here. But I like to write the notes just to help you for future exams or for future qualifications and just for completeness purposes. So political donations, we said you would definitely add it back. And the note we can make will say, not wholly exclusively for trading purposes. Therefore, how can you get a deduction? And the same would be for the qualifying charitable donations of £680 as per the question. You would add back. You can potentially get a deduction under corporation tax rules against taxable total profits if there are profits available. The impairment loss, we are saying that 1,600 relating to a trade debt was expense to P&L, and we are saying there would be no add back. It would be an allowable deduction. Why? Relates to trade wholly and exclusively, that's fine. The lease of the motor car, we mentioned that the CO2 emissions were 145 grams per kilometer. Therefore, only 85% of costs are allowable. Add back 15%. So keep that in mind. If grams per kilometer exceeds 110, for the leasing costs will not be fully allowable. Only 85% would be allowable. You'd add back 15%. So that would be 4,400 multiplied by 15%. Let's put a formula in. 4,400 times 0.15, and that gives you 660 add back. Health and safety fine is 5,100. We add back. Why? Because a fine is disallowable. If it's a fine incurred by employees, for example, a parking fine, and whilst they were out on trading business, basically, then that would be allowable. However, a health and safety fine is definitely disallowable. Legal fees on internet domain, I will put that back to note 5. Fully allowable. Why? Because it relates to trade. Interest payable, let's have note 8 there. It's fully allowable. Why? Loan is used for trading purposes. So that's mentioned to you in note 5. The loan notes were issued in order to finance the company's trading activities. And finally, we need to look at any capital allowances. Looking at the question again in front of you, we have the capital allowances information provided. So we had the tax return on value of the plant and machinery main pool was 39,300 brought forward. Following vehicles were purchased during the year ended. So in my pro forma, I've got the delivery van 28,300. Annual investment allowance is fully available against vans used for trading purposes. So we have 28,300 there. The motor car 124 grams per kilometer exceeds 110. Therefore, it would go into the special rate pool, and the value was 14,700. And the second motor car less than 110 grams per kilometer. Therefore, happy to put that into the main pool. If it was less than 50 grams per kilometer, you'd get 100% fair share allowance. Not the case here. So let's do a total. The main pool would be 51,700. Special rate pool will be 14,700. 51,700 at 18% times 0.18, and we'll put that in brackets because that's our allowance, so we get a deduction for that, is 9,306. So that's our writing down allowance on the main pool, and 14,700 multiplied by special rate pool writing down allowance has gone down to 6%, so we get that there, 882. tax written down value brought forward would be 51,700 less your 9,306 and 14,700 less 882 for the special rate pool. Our balancing allowances or our capital allowances would be the sum of everything we've taken over, and that would give you 38,488. So capital allowances of 38,488 as per our workings. We will have that as note 9, and therefore tax adjusted trading loss would be 124,388. That is for 9 marks. Where will the marks come from? You get half a mark for depreciation, gifts to employees half mark, gifts to customers half mark. So you get a mark just for the figures. Obviously this is all our explanation. Political donations half mark, qualifying charitable donations another half mark. So as we say, this is a 9 mark question. Depreciation, gifts to employees, gifts to customers, political donations, qualifying charitable donations, and your impairment loss will all get half mark each. So that gives you 3 marks in total. Okay, 3 marks. Lease of car gives you 1 mark because you have to do the additional 15% working. Health and safety fine, legal fees and interest payable would give you 1.5 marks. That gives you 3, 4, 5.5, and the balance 3.5 would be for capital allowances figure and the working, which we looked at, 9 marks. Okay, so part B for 4 marks is assuming that Retro Limited claims relief for its trading loss as early as possible. Calculate the company's taxable total profits for the year ended 31st August 19 and 7 months to 31st March 2020. And that is for 4 marks. We're looking at 4 marks, so not too much to think about or to understand, but if you have the question in front of you, then you would know that the trading profit, tax adjusted trading profit for year ended 31st August 2019 was 56,600, and for the 7 months was 47,900. Bank interest received was 1,300 and nothing for the 7 months to 31st March 2020. So that gives you a total of 57,900 and 47,900. So use the formulas whenever you can. We have a massive trading loss, which was 124,388. So our trading loss for the year ended 31st March 2021 was 124,388. And we'll put that in red as it's a negative, it's a loss. So early as possible, we don't look at section 39 CTA 2010, which is the carry forward against first available profits of the same trade. We look backwards. So section 37 CTA 2010 says that you can relieve any losses against the previous 12 months. So we have the 7 months had profits of 47,900, so that can be fully relieved, and then we can only relieve against 5 months of the year ended 31st August 2019. Why? Because we've already taken 7 months profits to be offset against a loss. So that would give you 57,900 multiplied by 5 months over 12, and that gives you multiplied by 5 divided by 12. So we can offset 24125 against the year ended 31st August 2019. That tallies up to 33,775 and no further profits. So we'll effectively get a tax refund on the corporation tax paid on the 47,900 previously. Qualifying charitable donations, we had 540 and we had 330. Qualifying charitable donation cannot be utilized as no profits available. You can get a deduction for the 540 there, and that gives you therefore taxable total profits of 33,235 for year end 31st August 2019 and 0 for 7 months to 31st March 2020. As I say, you can get a corporation tax repayment on what was previously paid. This was for 4 marks. You'd get half a mark for simply bringing in these figures. So that's a mark there. You'd get a mark for the Section 37 CTA 2010 loss. You'd get 1 mark for the working here. And you'd get a mark for only deducting the qualifying charitable donation against the profits of the year ended 31st August 2019, 4 marks. So part C for 2 marks, identify the amount of unrelieved trading loss which Retro Limited will have at 31st March 2021 and state how this can be relieved. We need to identify the amount of unrelieved trading loss. So we had 124,388, which was the loss, and then we relieved 47,900 and 24,125. So identify the amount of unrelieved trading loss. The unrelieved trading loss is 124,388 less 47,900 less 24,125, and you can do that calculation. And how can this be relieved? This amount can be offset by carrying forward and relieving against future profits of the same trade. Keywords there, this is section 39 CTA 2010. Key points there would be future profits or first available against first available future profits of the same trade. So first available profits, it did mention that it's looking profitable in the year ended 31st March 2022. So all those profits would be used to offset the remaining loss, and it has to be from the same trade. That would give you 1 mark each, 1 for the unrelieved trading loss calculation and 1 for the carrying forward under section 39 CTA 2010, 2 marks. Now, I hope you found that beneficial. That is the full understanding, the full working on how to get full 15 marks. Obviously, the pass rate is 50%, so you shouldn't be too disheartened if you don't get all of that. But the aim is during your studies to get at least 60 to 70%. And again, if you liked or if you benefited from this video, don't forget to hit that like button, comment with any questions, your thoughts, your understandings, and share with those who may also benefit. Subscribe, hit that subscribe button, and visit our website where we have loads more videos like this in order to help you get that ultimate pass for the ACCA F6 taxation paper. See you again soon. Thank you. Bye.